Hello and welcome back to the TradeNeon software channel. If you don't know me yet, my name is Simon Reichert. I'm part of the TradeNeon Academy team. And in this video, I would like to analyze together with you in our futures analysis platform, Futures Insights, the KC future, which is the future traded on coffee, which is traded at the ICE. As always, however, before we head into analyzing, our disclaimer that this video shall not serve as investment advice and/or intermediation, and that trading in derivatives or securities in general involves significant risk. But with that out of the way, I would say let's start off, as always, with our dry powder indicators for our managed money side. And if you have a look at the charts, you may think that this is a position that is not even that interesting currently. Because what is certainly the case is that we don't see an absolute extreme positioning that we had, for example, in the last couple of videos. But what is still quite interesting is that in comparison to the relevant past, which are the bright green and bright red dots in the charts, is that we have a positioning that is still quite relevant. Because for the managed money long side, we have a current positioning that is, in comparison to a relevant past, at the lower end of the spectrum. And what is even more interesting is that for the managed money short side, we are definitely positioned well above average when it comes to the relevant past. This simply means that for the ongoing short trend, which we have been seeing for, well, not for so long, but at least for the short to mid-term, that the managed money side has built up them short open interest quite significantly, again, in comparison to the relevant past, which simply means, or which simply leads us to the question, if already all of the institutions are short engaged, which institution is supposed to build up even more short open interest. And obviously we could build up even more extreme short open interest positions, but that is what our indicator and our chart is for, is that we can see what is our usual positioning in the market and that we have the statistical advantage on our side that the short open interest will go back to normal. And if that happens, that simply means that the institutions have to buy in order to close their short positions. And on the other side, we have still much more potential for a long trend in the market in the KC future. And this is probably also supported by our OBOS indicator, which relates the current positioning to more variables, including the current price or the current price related to the look-back period, which in this case is 1 year. Also, the amount of involved market participants and the total open interest. If we have an even closer look, we can see that at the 10th of March, we got a long signal with 89% intensity, which we can use as a fundamental bias for a potential long trade as soon as we see a long setup in the chart. So don't forget that if we get a signal in Futures Insights, that shall not serve as an immediate trigger for an entry in the market. Let's now head over to our PMPUs, which are our commercial traders. So these institutions, as they need this product for their commercial operations, or they sell this product for their commercial operations, they want to sell this product when they see it as quite expensive, and they want to buy this product when it's relatively cheap. And if we have a look at the PMPU chart, we cannot see a positioning that is super interesting, because the long open interest is well positioned fairly normally in comparison to the relevant past, and the PMP short side is, at the moment, they are selling fairly little, which at least tells us that they don't believe that the price is currently very high. But maybe we can get an even more clear picture if we'll have a look at the OBOS indicator. And what is quite interesting is that we got signals just recently, roughly 1 month ago, with 100% intensity, which is the strongest long signal we can get, or the strongest signal in general we can get. And what is interesting is that we have not been seeing any more signals just recently, which probably relates to the fact that that the long PMPU open interest has lowered just a little bit, but due to the fact that we just got the signals and the prices have not moved significantly, we can still use this positioning and this signal that we just got recently for a long fundamental bias. Next up, we got the open interest, which is definitely lower than what it used to be in the early phases of 2024, which probably relates to the quite significant price rally that we saw in 2024 due to the supply shortage when it comes to coffee. So we have since then we have lower open interest, which is probably due to the fact that the institutions are a little more careful when it comes to trading coffee. Maybe also because the price is higher. We don't simply know exactly, but what we have been seeing since roughly 1 year is that the open interest is positioned between roughly 150,000 open contracts and 177,000 open contracts. So this is nothing out of the ordinary currently, which is not a warning signal that we're seeing right now in the market for coffee. Maybe we can also get some important information from our flow cube, which tells us the market dynamics. So if new positions are being built up in the market or being lowered, and also in which direction. So more short open interest, more long open interest. And what we can see is that we recently got a strong long liquidation, which is obviously not ideal if we want to see an upcoming long trend, because strong long liquidation simply means that long positions are being liquidated or being closed in quite an extreme format. The week before we saw strong long building, so this is kind of mitigates this effect that we saw just 1 week earlier. Then we had week short building, week long liquidation. So this is not ideal if we want to see an immediate long breakout, for example, from this range that we have been seen in the KC future. So we might have to be a little more patient for a long move. What is, however, quite nice is that the short season that we had for roughly 1 month in the KC future is now over since 3 days ago. So we don't have to trade against this short season in the market, which is quite good for a long trade, obviously. Lastly, let's have a look at the term structure. The term structure shows us a perfect backwardation in the market, which simply tells us that the future contracts that are closer to expiry become more pricey. This is a bit out of the ordinary because it's the other way around, that future contracts that are further into the future to expire become more pricey as, for example, storaging costs are being priced in. So this is indicative of supply shortages. And in this case, the market participants are willing to pay more in order to get the underlying good as soon as possible. But what we can also see is that we have been seeing this state for quite some time now. If we have a look at the difference indicator, we can see that this has been the case for, quite some time actually. And if that's the case, the backwardation loses a little bit of relevance. So in this state, normally, because supply shortages are being accompanied with extreme price rallies, we want to be careful when it comes to short trades. But if the state of backwardation is in the market for months, then we can also look for short trades again. But obviously in this case, this is not extremely relevant because we are looking for long trades in the market. And what is quite interesting is that we've seen a sharp decline when it comes to the price, which was also accompanied with a relaxation of the backwardation. But just recently we got long signals again from the difference indicator, which tells us that the backwardation is increasing again, which is obviously good for a long trade, or at least doesn't speak against it. And with that, as usual, this marks the end of the analysis. So concluding, it can be said that the COT data is definitely speaking for a fundamental long bias in the KC future. Certainly the managed money side is doing that, and the PMPU side has been a little more relaxed in the last couple of weeks, but we can definitely still interpret that as more interesting from the long side. And also the term structure, specifically the difference indicator, also tells us that a long trade might be of interest. As per usual, if you have any questions, recommendations, or in general things you want to tell us, please feel free to drop us a comment and we'll get back to you as soon as possible. With that out of the way, I thank you very much for watching and see you again next time.